In the second half of 2023, the real estate market turned into a high-stakes drama under the influence of the Federal Reserve's monetary policies. This period was marked by significant shifts, primarily due to the Fed's response to economic pressures. Let's embark on a data-driven exploration of how these changes reshaped the landscape of residential and commercial real estate. The Federal Reserve's strategic gamble. In a bold effort to curb inflation, the Federal Reserve implemented a series of interest rate hikes throughout 2023. This decisive action led to a dramatic increase in mortgage rates, pivoting away from the historic lows experienced during the pandemic. By the third quarter of 2023, the average 30-year fixed mortgage rate, as reported by Freddie Mac, soared to approximately 5.8, a striking increase from the sub-3 rate seen in previous years. This increase was a seismic shift for the housing market, which had been riding a wave of low borrowing costs. The tumultuous residential real estate scene. Mortgage rates and home buying sentiments. The climb in mortgage rates sent shockwaves through the housing market. Data from the National Association of Realtors painted a vivid picture. Existing home sales plummeted by about 8.5 compared to the same period in 2022. This decrease signaled a significant cooling effect as higher borrowing costs started to dampen homebuyer enthusiasm. The once booming market, characterized by frenzied bidding wars and skyrocketing prices, began to show signs of normalization. Home prices and the inventory conundrum. Despite the cooling trend, the housing market didn't crash as some doom predictors had anticipated. Instead, the CA Case-Shiller Home Price Index revealed a more nuanced story. Home prices continued to rise, albeit at a slower pace than in the preceding years. Year over year, home prices in major urban centers saw a moderate increase, suggesting a market adjusting rather than collapsing. Meanwhile, housing inventory levels remained stubbornly low, partly due to ongoing supply chain challenges and labor shortages in the construction sector, further complicating the market dynamic. Investor reactions and real estate investments. Differed in testing sands for investors. Real estate investors faced a new calculus as borrowing costs rose. The higher interest rates necessitated a reevaluation of potential returns, particularly for investment properties. However, the market saw resilience in certain sectors. Multifamily properties, for example, remained a hotbed of activity, buoyed by a steady demand for rental housing. Commercial real estate, a varied landscape. Commercial real estate sectors experienced a diverse range of impacts, while traditional office spaces in major urban centers grappled with the ongoing shifts towards remote work. Industrial and warehouse spaces saw an uptick in demand, driven by the burgeoning e-commerce sector. Retail spaces, on the other hand, continued to evolve, adapting to changing consumer habits and preferences. Long-term implications and projections. The Fed's policy maneuvers set a new course for the real estate market heading into 2024. Analysts kept a watchful eye, speculating that a relaxation in inflationary pressures might prompt the Fed to soften its stance on interest rates. Such a move could reinvigorate home buying activity. However, the shadow of global economic conditions loomed large, adding layers of uncertainty to these projections. Conclusion? The second half of 2023 in the real estate market was nothing short of a roller coaster, driven by the Federal Reserve's decisive actions. The increase in interest rates upended the housing market's dynamics, affecting everything from homebuyer behavior to investment strategies. While the market cooled from its previous feverish pace, housing prices remained relatively stable, and certain commercial real estate sectors adapted to new realities. The period underscored the profound influence of macroeconomic policies on real estate, offering a compelling chapter in the ongoing story of the U.S. economy.